let's start off with you, and I think let's start off with how the manufacturing sector fared in the month of August. Of course, we know the month of September is far more difficult because of the strikes and carbon tax, particularly for your division of the economy as well. Tell us what your experience was in August.
Yeah, the automotive industry is about 3.5% of the 15.5 of GDP of the manufacturing, so we're 25%. For us, this particular period is very rough. We've had a sort of 4 major strike actions that's come through, plus the carbon tax that sort of skewed numbers in the August sales numbers. So you're going to see a high uptick in pre-purchases to avoid the carbon tax payable from the 1st of September. That's going to skew the numbers. But we're still hopeful that for the year that we could be 20% up on last year. Although compared to 2008, we're about 32% down, the second worst affected in the world from our manufacturing portion in the automotive manufacturing. And then obviously for us it's important to see if we can recover. Most of our customers would like to fulfill their export obligations, and therefore we are now going in a period where we'll be working 24/7 and weekends to try and recover back. So hopefully the manufacturing data to the end of the year will show an improvement of 20 to 22% on the automotive industry.
What's your view on that, Laura? Because of course when we talk about a potential 9.5% rise year on year in August, we are looking at a low base effect. So it doesn't show that the manufacturing sector is healthy, it just shows us it's slightly better than it was last year, doesn't it?
Yes, certainly. Our expectations are for an 8.3% increase on a year-on-year basis, but we expect to see a 1.8% contraction on a month-on-month seasonally adjusted basis. That is driven partly by the strike as well as a slowdown in global growth. You know, the lagged impact of the strike that we saw in the second quarter is still creating quite a lot of uncertainty. It didn't come through in the June and July figures, so there is a bit of uncertainty as to how it's going to play out in the August number.
Well, Theo, I mean, let's touch on the rand very briefly and just look at the impact of the rand, because we know that, you know, we're hitting incredible levels. We were at 6.86 against the US dollar. We've weakened since then, but many are saying that we could breach that 6.50 level. And what kind of impact does it have on your business?
Now, for us, it's very severe. If you just look at the component export portion of our portfolios, although they're only up 15% compared to the rest, they're still 30% down on the previous years. And then obviously for us is the challenge is to stay in business. We have got a support system through government with the APDP, but at the levels that the rand is currently, we do become uncompetitive in certain areas. So it's particularly the commodity that you are in, if it's available locally, and the protection that we got from, you know, products that don't travel well. So if you're not in those niche market products where the raw material is available locally, and you've got products that travel badly that you compete against, we could see some major retraction where certain components will be manufactured in this country going forward. And that's in labour increases that we applied that's much higher than CPIX. In our industry it was a 988, 3 years going forward. Our customers was a 1099. And then obviously at this rand, we need a devalued rand to a certain extent to compensate for our inflationary pressures that we got in South Africa, especially in labour and in energy that's coming at us.
Yeah, do you also face increased competition from cheaper imports when we see the rand as strong as it is at the moment? And what sort of level would you be comfortable with?
Yeah, listen, it's obviously a good question. Compared to sort of when we had a good period, the rand level in 2008, February, those sort of periods, what's above the 9s. I don't think we'll see that again against the dollar. So what is a realistic, responsible exchange rate for us that makes us competitive on a cost index manufactured compared to Thailand or India or compared to China? We would say 7.5 to 8 at least to the dollar is the levels that we need to see, not to be comfortable, but at least have some sort of pressures and not to walk away from export markets. Some of our customer bases and supplier bases have to pay penalties currently to walk away from certain export markets.
Laura, where do you see the rand going from here? Do you think we could hit that 7.5 to 8 to the US dollar? I mean, we've even heard news that China is going to start diversifying into various emerging market currencies, and many say the strong rand scenario is going to play out for some time to come. So it seems that many of these companies and, of course, manufacturers in the country have to start accepting the fact that we have a very strong local currency.
Yes, the RMB house view is for the rand to end the year at 7 to the dollar and then nudge to 7.75 by the end of 2011. I think if we look at the breakdown in the manufacturing data on a year-to-date basis, there is definitely strong evidence of the import competition via the strong rand. The sectors or the subcomponents that have fared the worst have been the textiles, communications and electrical components industries, all which are showing evidence of the rand strength. And the risk going forward is that, you know, we continue to see the rand strength, and coupled with that, the slowdown in global growth, which, you know, will hit the manufacturing
most
industry.
emerging market currencies are experiencing the same thing. In other words, a lot of strength and appreciation in their currency. Surely we're basically all in the same boat. So, you know, in terms of the competitive environment, it seems that perhaps we'll start leveling off from an emerging market perspective.
I think definitely, and you know, in terms of the growth, we're definitely seeing a slowdown in global growth. The IMF has sees global growth at 4.2% in 2011, which they've downwardly revised that. And we're also seeing a softening in all the global PMIs. While most of them are still above 50, there is definitely weakness coming through, which is going to affect South Africa. But of course, we have our own issues that are unique to South Africa and unique to emerging markets as well.
Yeah, of course, we also talk about productivity. So in the face of a strong rand, the companies have to learn, and manufacturers have to learn how to be more productive. I mean, what sorts of steps are you taking to live with the rand at these levels that you can remain profitable?
Yeah, listen, you need the protection from, it's the basket of products that you choose to manufacture, and choose the ones that don't travel well and where the commodities are available locally. But just from a labour efficiency point of view, with the labour increases that's been awarded, we're 50% above the norm for the next 3 years, so efficiency will have to improve by 15 to 16%.
But can it and will it?
Yeah, it will have to. You've got no choice. If you want to survive in this market, that's something that you got to do. It's the challenge that you got to ride to. If this is the level that the rand is at, you got to reset your business at this level, meaning that in certain instances you'll become a better trader and manufacturing. So it'll be a combination. You can't be a pure manufacturer in this environment. It's going to be in the future a combination of manufacturing in niche markets, plus some trading with the products where you can import competitively, and that's an adjustment that most manufacturers will have to make.
Imete predominantly focuses on original equipment manufacturing as well, and we know that there was a lot of overcapacity, especially when things started getting bad in South Africa. So we have started to see a little bit of a contraction when it comes to OEMs. So what is your strategy going forward?
Yeah, listen, OEMs has come from 527,000 vehicles in 2008. Last year, 54,000. Our projection for this year is we can touch the 420 level. So at this levels, you got to just readjust your business to those levels.
Laura, last word to you. We have retail sales also coming out tomorrow, and of course it's August numbers. We saw great numbers for June and July. In fact, I think the July reading 7.9%. What's your expectation for August now that the World Cup is well behind us?
Well, we actually expect to see retail sales picking up slightly again, partly as a result of the World Cup effect, which is actually in fact still coming through, as well as the strong wage growth that we are seeing.